Okay, I've been holding off on doing a rate update video. One, there is not a lot of movement, and two, just gathering some thoughts and some things that way. Um, so look, we know now as of the January 25th meeting, Bank of Canada said the rate holds are on pause. That has remained to be the sentiment. You wouldn't have another meeting until the beginning of March anyway. The U.S. has now come up with the Fed moving rates by 0.25%. And so, remember the actual rule of thumb roughly is that Canada always needs to go at a pace of 1 to 2. So for every 0.25% that Canada raises rates, that should be at the same time the US is raising 50%. So 0.25% does support the theory and the sentiment that Canada has on moving rates as a pause. So I think we have a situation where at least roughly a year we could have rates static, no rate changes up or down. And so, first thing we really want to highlight here is that we get a few thoughts. We get first of all, I think we get people that are asking, "Hey, is now the time for a fixed rate?" We have people that go, "I wish I would have done a fixed rate," even though they agree with all the data at the time, or they're not upset with anybody, they're not yelling at us. I wish I would have done a fixed rate, and I think this is an unbelievable concept. Is that we get asked all the times, if we know what we knew now, would we have recommended a variable in 2021? Would we have recommended a variable last year? Would we have recommended a variable halfway through this year? Would we recommend a variable now? In all cases, the answer to that is yes. And I will tell you the very, very simple principle here. When it comes even to life, but definitely to finances, the mantra that I use is to win the game, even if I lose the hand. It is true that there are some people that will have my luck more than anything. And I think this is an important distinction. It's not that they're smarter, not that they have more knowledge. It's not that, their uncle gave them a hot tip. By luck, they will have picked a time where the fixed rate may have become better. That remains to be shown. I mean, I think this is there's a lot of things that scare me, but one thing that scares me is the people that are sure that would have done better on a fixed rate and they're only 1 year into a term. In fact, I can't think of one person that I've had a conversation with that is sure they're doing a fixed rate that didn't do it in 2021, which means that, like, at the very best, we are talking about people that have 3.5 years left in their term. Listen, do you realize that 3.5 years ago rates hadn't even gone down yet? Circumstances around COVID hadn't happened yet. Like, there is a ton of things that can happen in that time frame, and being absolute that means that you should have had a fixed rate is downright dangerous, to be quite honest with you. So we know that 90% of times since 1952, including wars, including high inflation in the 70s and early 80s, including the financial crisis of 2008, 9/11, all this stuff, we know variable outperform the fixed rate 90% of the time. Not even close. That very statistic is enough reason for us to recommend variable, just because we get the odd client that will have got lucky and picks a fixed rate during the right time. It's exactly the same principle as buying stocks, where people go, people try to time the market. Timing the market is luck, not skill. And everybody will say it's not timing the market, it's time in the market. And so this is the same principle. We are encouraging clients to take what has been proven time and time again over a lot of economic events over a long period of time to be the better strategy. And nothing's changed. Nothing's changed. So, that is, and I'd rather, and I know that at the end, when we do a variable personally and for clients, that means that they win the game when it comes to a mortgage. Even if there's the odd time you go, oh my goodness, that could have been that opportunity. That's luck. And the worry that I have on that is that somebody that gets lucky in that circumstance, like if we get a client that locked in at what became the most appropriate time, what's going to happen is that I'm very sure they're going to lose a lot more money next time. Because what's going to happen is that next time they say, well, I did really well on the fixed rate. Look at how smart I am by choosing the fixed rate over the variable. And they'll choose fixed rate again when it becomes not even close. And that's where they'll get themselves into trouble. So I'm pretty sure that most people that take the fixed rate will end up with a situation down the road where it will have cost them money. So I predict that we have very little wins for them in those circumstances. I think another way that people get messed up too is that they go, hey, look, what if banks don't really care about the little guy, they're looking for profit, some sinister plot. I mean, I think this is should I if they're, you hear me talk about, which I believe to be true, that banks and the Bank of Canada are not really giving a lot of consideration to the impact of rate hikes on the average person. And that is 100% true. No matter what they say, I think they're not thinking about that whatsoever. And I think that, a lot of people go, because of that, that means I need to make a decision because they will raise rates to my disadvantage. And I think that the other thing that is forgotten about that is that, like, we're swimming for the same pool here. Unless you decide you're going to, like, buy a house for cash or get a private loan from your parents, we're getting money from these same lenders, and that includes both a fixed and a variable rate. And so what happens is that a lot of folks talking about, you're swimming from the same pool of money. It's like going to a restaurant and saying, "Hey, I'll have the chicken. I heard that you poison food, so I'll have the chicken because it's less likely you're going to poison the beef," or something like that. I mean, that's an extreme example, but this is, we have to realize that all products have the same belief system behind it. All products have the same people funding and same products. So a fixed and variable, it's that the truth is that rates are higher. I mean, people, you don't benefit, and you're just, when you say, okay, well, I need to have a fixed rate because that's lower or whatever it is. And eventually you will, in Canada is that generally a 5-year term means 5 years down the road, you will have the higher term and you will encounter those higher rates. And so we'll do whatever we can to lower your interest. That's our job and suggestions, but it doesn't mean that it means that these products are still the same. Eventually, if either rates are high for a small period of time, they all go lower, or rates are higher for a longer period of time. And no matter what, fixed and variables, they'll be higher. Okay. So that's some thoughts there. I wanted to leave you with and this may seem like a paradox, the conclusion of what I'm saying, but so, a variable, most variables are around, if you got them in the good time, around prime -1, that puts you at 5.7. You could still lower your variable. So option one, if I had a variable above that, and this may be triggered if I did a refinance is a higher rate. But if I move that mortgage, it's called the transfer. So I'm not going to take out new money, but I'm just going to move it to a lower rate. That's actually a lower deal. I can get that down as low as prime -90. So first option, that is something that people don't realize. If I have a variable, but I'm not around the 5.7 range, get a hold of me. 5.7 range, that's where we want to be as far as a variable. Secondly, fixed rates have dropped meaningfully, and bond yields. So lots of people think we don't know when rates are going to go up or go down. Not really true. We usually get a little bit of lead time, and that's when the bond market shows us that. And so the bond market is indicating fixed rates to drop lower. This creates somewhat of a conundrum, in the sense that we could have fixed rates mid, even low 4s. And if variables are the 5.7 range, that's a 1.5% difference. Okay, so here's what I think. We're not going to recommend fixed rates. I'm not going to go with fixed rates, but here's where you could take a fixed rate, and we could help you do that. First of all, the variable strategy I talked about, if you don't have a variable that low, let's talk. 2, we talked a lot about bank relief programs. I've seen every lender screw all those up. Like, let's just be honest. They're screwing them up. They're sloppy. They're dishonest. They are being inconsistent. Like, it's all bad. It's all bad. They're doable. We'll help you with them, but it's not going well. You could, if you needed, to go to a fixed rate strictly because this was a very, the payments are too high and they're affecting your standard of living. Okay, I can get around the idea of you taking a 1.5% decrease to do that. You have to go with the caveat of a few things here. If you go down to the fixed rate, eyes wide open on that penalty. Like, you're not getting out of that anytime soon. So that's that is something to realize. Maybe you want to go 2 or 3 year term, at least that same rate, absorb some of that penalty. I mean, the truth is, if you're getting out of it, you're just going to pay a penalty, like $19,000-$20,000 ish, maybe. I mean, it might not be that high, maybe it'll be half, but plan for that. So if you really, really need the payment relief, I guess at this point, the only legitimate payment relief is lowering that to that fixed rate. But if you really, really need it, because I think you are going to regret it from the long-term interest perspective. You are going to regret it if you decide to move up. Um, and I think, moving to a fixed rate means that you're looking for something on a temporary basis. You might want to consider if, you have a house with where the market is at, you want to maybe move down to a townhouse or something. Anyway, those are all things. So you want to go to a fixed rate if you definitely need the payment relief and there's still some risks on there. Two, I mean, I think if everything we've said, you still just come to the conclusion the fixed rate is better. I think that's fine. I mean, you're still going to pay the mortgage. I'm not going to pay it for you. Get a hold of me. We can move it down to a fixed rate. And I want you to know that, like, it would be easy if the rate is a 1.5% lower for us to tell all of you just to let's tell your variables, redo them all the fixed rates, and we'd have a great year. But I still don't believe that's the best advice. So I think that if you want to go fixed rates, they are lower. And if you're still sure that is the best option, hey, we will help you do that. Even though I don't recommend it, we will absolutely help you through it, walk you through all type of thing, and get a hold of us. So if you have any questions, you want to discuss your mortgage or anything like that, please do get a hold of me. Don't leave it. Let's have some chats. Let's discuss what you can do or not do, and let's go from there.